El Salvador becomes the first country to adopt Bitcoin as its national currency. Guys, what are the pros? What are the cons? What are some considerations? And what is the final bottom line? So obviously for pros, right? Number one, if Bitcoin goes up in price in the long run, El Salvadorans will become richer in the long run. They'll be able to purchase more goods with their Bitcoin, right? Anything that they're importing from other countries that are denominated in US dollars, euros, Chinese yen, whatever the case may be, they'll be able to buy more of it as the Bitcoin value goes up. Number two, this is a move towards opting out of our global, central bank system. Every country has a central bank that can typically print currency of that country's denomination, which basically enables the central bank to kind of create these boom-bust economies, right? It's able to create an environment where money is overprinted, rates are moved artificially low, and that creates asset bubbles, right? So it shows the El Salvadoran government's commitment to giving its citizens kind of an opt-out option from that system. And then number three, which links to number two, shows that the El Salvadoran government is a first mover and they want to give their people access to an alternative that may be better than what they're currently using, i.e. cash, right? So Bitcoin cuts out financial service middlemen to enable people to just transact with one another, whether that's, lending out your Bitcoin and receiving a return on that, whether that's sending your Bitcoin around the world to whomever it may be. It cuts out the financial middlemen and just enables the transaction between two people or two entities. Now, according to Wall Street Journal, right, 70% of the El Salvador workforce operates in a cash-based economy. So this move towards Bitcoin could kind of accelerate their move towards having more financial options. If you're only working with cash, you're kind of limiting your financial flexibility. I mentioned, with Bitcoin, loans, you can take some of your Bitcoin and actually loan it out and get a return on that. So a lot of cryptos are offering that service, and that could be of benefit to some El Salvadorans. And this move towards Bitcoin, on the surface, it might seem like the government is giving its people more freedom, but as I just mentioned, 70% of the workforce is operating with cash, and the government can't track cash. If Peter gives Paul $100 for a service, no one's really monitoring that transaction. So on the surface, while this might look like the government is giving its people more freedom, really what it's doing is giving the government more control, ironically, since Bitcoin is viewed as kind of this cryptocurrency that can, bring about more freedom and separate us, like I said, from that central bank model to economies. But really in this case, while the pro is that the government is giving its people access to an alternative, it's actually under the surface giving them more control over those transactions. And now for the cons, right? Well, obviously, if the Bitcoin price goes down significantly, there's going to be a massive loss of wealth for all of those El Salvadorans holding a significant portion of their savings or wealth in Bitcoin, right, when they transfer over. And this doesn't just happen in the long run, but it can also happen in the short run. So even if in a year where Bitcoin price goes up 10%, you can have dips of say 5, 10, 15%, 20% that happen during that year, which can cause some supply shocks, because when the price of Bitcoin goes down significantly, businesses that are operating in Bitcoin or transacting in Bitcoin, or their customers are buying from them predominantly in Bitcoin, they might be hesitant to buy goods from overseas, right? Because it all of a sudden became 15% more expensive. Let's say if Bitcoin goes down 15%, relative to the US dollar. So even in a year where Bitcoin goes up 10%, El Salvadorans could experience a good amount of supply shocks just from that volatility and manufacturers being hesitant to kind of buy goods and or services that they need to import from elsewhere. And that links to the second point. And I think this point is really important. El Salvador is a net importer. What does that mean? That means that they receive more imports. So they receive more imports from countries like the United States, China, Guatemala, Mexico, and Honduras. Those countries are sending El Salvador more goods than El Salvador is returning back to the world. So that essentially means that to balance that gap, right? Let's say El Salvador gives, let's just use El Salvador and US right now, for example. Let's say El Salvador gives the US in a given year $80 million worth of goods, and the US gives El Salvador $100 million worth of goods. Well, there's a $20 million gap there. How is that covered? What happens is El Salvador gives the US IOUs or bonds or stakes in El Salvadoran companies. So that's part of its capital account. The current account is the trade balance, so the imports and exports, and that has to balance with your capital account. So in this case, El Salvador's current account, right? They're sending 80 million, they're getting back 100, so they have a $20 million deficit with the US. That $20 million deficit has to be funded by financial assets. So El Salvador may give the US $10 million worth of its bonds or debt. So the US now holds $10 million worth of El Salvadoran debt that El Salvador is paying the US interest on. And the U.S., the remaining 10 might hold $10 million worth of El Salvador equity in El Salvadoran companies in exchange for this $20 million gap. And so what are El Salvador's biggest, products that they import? Well, the biggest ones are fuel, electrical and electronic equipment, machinery, nuclear reactors, boilers, and pharmaceuticals. So when you look at those imports and you kind of think about it, I mentioned earlier, if the Bitcoin price goes down significantly, that's going to be hard for them to import those products. A lot of those products are really critical to their energy needs, obviously to their technological needs with the electrical and electronic equipment, and then health, pharmaceuticals. So if you have an economy that's, say, transacting 50% in Bitcoin, they might experience some real problems if there's a decrease in the Bitcoin, a sharp decrease in the Bitcoin price, because it might be harder for them to import those goods. It's at least going to cost a lot more in Bitcoin, and that could hurt the citizens significantly when those price shocks do come. And the third point is, right, what we're seeing now is creditors, so people loaning to El Salvador, are becoming more hesitant to loan them that money, right? They're a little worried how this rollout might happen, whether it'll be successful in the long run or not. That's another question. It's increasing the risk of what could happen, right? So investors are kind of getting cold feet. They're not sure whether they want to give as many loans out to El Salvador. So what does that mean? Well, if the U.S. was originally giving El Salvador $100 million worth of goods in exchange for $80 million, and then funding the $20 million gap by, say buying $10 million worth of El Salvadoran debt and, gaining $10 million worth of equity in El Salvadoran companies, what might happen instead is the U.S. might say, we don't really want $10 million worth of your debt anymore. We're not as confident you could pay us back. Maybe we only want $5 million. So what happens then? Then the U.S., instead of sending $100 million worth of goods to El Salvador, they only send 95. And the $15 million is made up by the $10 million in El Salvadoran companies, the $5 million in debt. So all of a sudden, El Salvadorans, the imports from El Salvador just went down by 5%, which essentially means they have 5% less goods than they did before this. That could lead to you could see how this could lead to some shortages in goods, critical goods for El Salvadorans in the short run. So that's the third con, guys. Now, what are some considerations? So El Salvador has $64 million in gold reserves, worth of gold reserves. This is about 0.5% of their total debt. Now, to put this in perspective, they spent $225 million on this Bitcoin rollout, right? Giving every citizen $30 worth of Bitcoin. El Salvador also has $2.9 billion in foreign exchange reserves, which is 15% of their debt. So foreign exchange reserve could be they're basically holding other currencies. So they're holding euros, they're holding yen, they're holding different currencies in their central bank. And this is typically used in times of crisis. We saw their foreign exchange reserves just dip by 2.5 billion actually, kind of during the COVID crisis. At the end of 2019 to the end of 2020, their foreign exchange reserves went down by 2.5 billion. And keep in mind, right now they only have 2.9 billion. So what does that mean? Well, when the next crisis hits, they're going to be forced to use some of those reserves. And if they don't have enough, they're going to be in deep trouble, because they rely on those reserves for basically liquidity. They could be doing purchasing all kinds of things with those reserves, but if they don't have enough, it can result in a crisis for the country. And then thirdly, right, this kind of goes back to what I was saying. If there's a shock to Bitcoin, they might not have enough foreign exchange reserves to cover that loss. And they may need to, use their gold and or foreign exchange reserves to cover that loss. But if they don't have enough, they're in deep trouble. And then tax liabilities. Even though its citizens can use Bitcoin, they pay taxes in U.S. dollars. So if the value of Bitcoin is fluctuating a lot, then that's going to create a fluctuating tax income for the El Salvadoran government. Another consideration there. So what's the bottom line? Well, one, I think this is a risky move for El Salvador. I think it's, with big risk comes big reward. It could make the citizens a lot richer in the long run. They could also take a big hit in the long run if the price of Bitcoin goes down. And something that I haven't mentioned, not all of the citizens in the country like this move. There have been some protests because of the big risk with Bitcoin. A lot of the working class of that country views it as kind of a speculation play for the rich. So they view it as kind of a spit in the face that El Salvador is making this move, and they're not sure if they could even afford to take this risk. But then thirdly, I think overall this is a good move for the world in general, right? This move runs contrary to the global central banking, system that we kind of have currently in place. So I think it's a good move for the world in general, but I think it might be a little bit of a big risk for a country like El Salvador. So there you have it, guys. If you like this content, hit the like button, drop a comment below, get the conversation started. If you didn't like this video, hit the dislike button. Tell me what I could improve on in the comment section below. And of course, I appreciate anyone hitting the subscribe button. All right, guys, take care.